Hello friends, this is a critical chart of the market, entire market, S&P futures, and the levels I'm about to describe are also valid for SPX, SPY, just some shifts will take place. So what the agenda is, this is a daily chart. Looking at the inventory levels from the banks, these are the critical points. Now this is daily chart. As we noted, an aggressive break of 38.05 because of the news will bring the retest of 36.40 price level. This is where the big bank inventory is sitting, and be cautious about this scenario. And if this holds and we get a positive direction move, we can expect market to at least hit 40, 50 area. Right now we are in middle of La La Land, and so trade at these levels, which I think are going to give you, again, these are daily charts. We are trying to show where the big inventory is, not on 1 minute, 5 minutes, 15 minutes, 1 hour. We don't go below 4 hours for the banks. So the daily is much more visible. Now, keep these levels intact. On the high side, we're looking at inventory to show up around 43.94 and 40.49. Now, this is a monthly, weekly, quarterly expiration. Big decisions will take place, followed by the Fed making its choices, which will trigger these locations where you can make your hedged positional bets. So now, below that, 33.50, and now that will become a low from multi-year low. We don't have to worry about that, but these are the complete levels where the inventory is sitting to take action. Now, these are the immediate levels I just explained. Break of this 36.40 is the retest again. It'll also become your technical terms. It'll also become your head and shoulders at this point. And this is where the banks are hiding at this point. Just watch this, very critical. And if they release their hedge, it'll head up very fast. Now we need some nasty news to really trigger that situation. People have been investing a lot in collecting premiums by selling puts. Or if they are buying puts, market makers will take the opposite direction. If people are buying puts, they are selling puts. So now take an example of a market maker or a big bank who is a market maker, where some institute or hedge funds or large body of investors bought huge puts. Somebody's buying, somebody's selling. So the market makers are selling. They're selling the puts. They're essentially long the market. So they need to hedge it by selling futures or shares to keep their delta neutral positions. So which basically means then as you move closer and closer, the gamma is also going to get impacted, right? So there's a lot of discussions. Not worry about those scenarios, but you have to understand that. Think about what you are doing and multiply that 10 times or 10x, maybe e raised to power 10x. Instead of you buying 100 contracts, you're buying, let's say, a million contracts or 10,000 contracts. 20,000 contracts, right? 30,000 contracts. If you're buying those kinds of puts, who is selling you those puts? Market makers. Selling the puts means they're long. They have very aggressive risk for market to go down. So they have to hedge themselves by selling the stocks because they are long the market by selling the puts. To neutralize the long, you have to do short, right? Short the futures or short the market. Now, again, those numbers will change with delta and gamma levels. How they don't do hedge every tick by tick or point by point. They hedge when the risk reaches a certain level, right? It could be 300 deltas. If there are a lot of large positions, if they are if there are not many positions, they can manage the risk. They may not even hedge, right? So this is the entire market and the way the things are unfolding in the market. This is the war zone. Just watch out for this. But for this upcoming uh, couple of weeks or week, just keep an eye on this as next 10 days unfold. Thank you.